is kind of what we call a veteran trader. He's been trading with. He started out with as a trader for JC Capital, a division of Andover Trading. He specializes in support and resistance for option trading strategies that allow traders to get that high probability, basically big and small accounts alike, to earn big returns from small trades. So he's developed his own proprietary trading rules, or tools, I'm sorry, the probability tools, which are very accurate as far as providing strong support and resistance levels. So he's been trading, or since 2002, he's been mentoring multi-dimensional trading strategies for the stock and options in live markets, trading total newbies for over 25, training newbies to 25-year traders, some with institutional backgrounds such as Goldman and Deutsche Bank. So without any further ado, Mark, thank you for coming back again. We're very interested in seeing your stuff tonight. Welcome to the Candlestick Forum.
Thank you, Steve. Thank you for the nice introduction. Good evening, everyone. Good evening. So a quick sound test. My name is Marc Nicolas. I'm the founder of the Day Trading Zones. I've been a trader just like you for almost 21 years now. Like Steve mentioned, I started trading in the prop firms and the hedge fund environment. Reason being mostly is because I didn't have capital when I came in the US to be a trader, a retail trader with my own capital. After a couple of years, I've been just like you, mainly a trader with my own money. The Day Trading Zones is a research and analysis firm for institutions and retail traders. I started helping traders in 2002, so it's 12 years ago. And tonight I want to share with you a lot of strategies and maybe think differently about your trading in general. You know, so if I can touch a couple of individuals in the room to share things that I do with real money. I'm a real trader. I don't know if you see my account for today, but this is my account for today. This is my P&L for today. This is not a SIM paper account. This is a real TOS account. I made $1,000. It's a small account. Okay. I mix directionals and time decay strategies. So whatever I'm going to talk to you about tonight is stuff that I do. It's things that I do day after day after day after day for the past 22 years. So I've been there, done that, blood, tears, and millions of dollars traded, and a lot of successes also along the way. But it's not a linear line. You know, it's trading is going to be a journey. It's going to be a journey for most of us, especially the guys that sustain over 2 years or 3 years. Okay, so the stuff that I'm going to share with you hopefully will be pragmatic and change your trading career for the better, or at least make you think of your trading career differently. So we'll go back into the accounts. We'll go back into the statistics. Here I use the Day Trading Zones Trend Navigator, and I use also the standard deviations from the market maker and the institutions. But I'll go over that and I'll show you how I mix that. After I'll give you some of the bases that we have to think of as traders. So again, when we trade as traders, we have two choices. We can take a 50% short, which results in 90% of the traders losing money by trading the bid and ask price, the current price, or you can take a 68 to a 95% short, regardless of whether you get the market directions right, wrong, or whether the market goes up and sideways. And essentially what this is being able to sell premium and sell time decay at the right support and resistance. The support and resistance that are going to give you a probability of success of 68 to 95% of success, but are not necessarily the market makers' 1 standard deviations, 2 standard deviations, or 3 standard deviations, because as you know, during market earnings period, the standard deviations are BS. And the reason they are BS is because there is gaps. You have gaps on Apple, you have gaps on Google, you have gap on a lot of stocks that completely destroys the expected move from the market makers. So tonight what I want to help you with is understand support and resistance from the professional side, with the cluster high, cluster low, and which zones on your weekly chart and 60-minute charts you can see visually without any tools, looking at what the professionals are doing. Knowing when and where to enter with proper trade setup and chart formation. Understanding the proper size and risk, which is money management. Understanding how standard deviation are not always right, like I just mentioned. And overlay above all the everything, strategies that gives you high probability of success. Because again, we as traders have the choice to trade at the current price, or we have the choice to go and so those are some trades I've done where a lot of people were selling Apple when Apple pulled back at 490, 500. I was piling up calls and put spreads and debit spreads. You can see here, for instance, this was a debit spread, 495, 505, a 10-point debit spread. I bought it for 449, went to 965. That was a double. This is to show you that proper support and resistance, where nobody sees the support and resistance, is where you have an edge. Where the market makers and the institutions were dumping Apple, I had an up arrow on my full Pro Tool, a cross-recross, a retest higher low with a confirmed second arrow, and blue dots for a continuation of a 60% move on the upside on Apple within the main trend. And usually your main trends are going to be your weeklies and your monthly lines. But the problem with traders is you're looking at a daily chart, a 60-minute chart, a monthly chart, and a weekly chart, okay? And what happens is you spend a lot of time trying to look at this one and this one and this one and looking at different indicators before you trigger a trade, okay? And me, the way we trade, and I'll show you how I do my morning prep, we define buy zones, sell zones, and cushion zones every morning before the market open and zoom into one or two markets that we are going to make money on, right, instead of being the jack of all trade. And so I spend a lot of time preparing in the morning so that I spend minimum time of trading. As a matter of fact, I trade only between 8 a.m. and 11 a.m. Eastern time every day. And this is where most of the professional trade, most of the actions and the gap field and all the volume, the burst of volume in the marketplace are between 8 a.m. and 11 a.m. So I'll show you how I simplified, instead of looking at the daily, the 60, the monthly, the weekly, I simplified everything into one chart, a 60-minute chart, where I have all the information that I need with the right trade setup that I'm going to share with you tonight. If done properly, can change your life with your own support and resistance. Now, to make it a little more interactive, since I have been only 3 times for the past 2 years in the Candlestick Forum community. It's a great community. People have been very engaged with the stuff that we have done. Just curious, what is it that you guys trade? And just to make sure the sound's still going through, hopefully, correctly. I don't know what Jim said here. Okay, he talked about, okay. So quickly, what is it that you guys trade? Options, futures, or Forex, or stocks? Just curious. So back, stock, and options. Gary futures, deal options, call put options, futures and options. Okay, so we have a great crowd tonight. We have a crowd of options and futures mixed mostly, and stocks, which is awesome. Okay, what I trade mostly is stock, futures, and options. That's what I do. This is what I've done for 22 years. I do not trade Forex. I do not believe in Forex. Unless you buy and hold like Jim Rogers for a couple of weeks and a couple of months, or George Soros. I don't believe in day trading or trading currencies. Okay? So, and I've been there, done that for 21 years. So I have the blood and the tears to prove it. Okay, so this is typically the type of stuff that I do, where I try to manage my deltas and I try to manage my thetas. What I do at the end of the day when I go to bed, I want my total theta, which is my time decay, to be positive, okay? And my deltas to be between 0 and 1,000. Because what happens is you get caught up with a lot of positions, And what I do is the directionals, the debit spread, the puts and the calls that I buy usually on the indexes, IWM or SPY. Okay, these are stuff, guys, that I do where I manage. See here, I take the little blue pen. Hopefully, it doesn't interact. But this is the stuff that I do where I want my theta to finish my day positive. And I'll show you why you want positive time decay in your overall portfolio and get rid of your negative. So here on the portfolio, you can quickly see, okay, this position gives me too much negative theta, negative time decay, negative time decay, negative time decay. So those positions, when they start making you money, those are the positions you want to get rid of and keeping the position that gives you positive theta or positive time decay. Okay? So let's get going to the next chart. This is another one where I got, when you have proper support and resistance, a quadruple on Netflix, but that 529, it was 21. And this is typically a beautiful example where I do a credit spread for 5 contracts, okay, a put credit spread. I was bullish on Netflix at 320. And then I bought a call, which quadruple on the weekly. And if you look at my theta decay, I still end up with positive theta. So what I do is I do those in and out for the day, and then I add the theta. So I always do theta plus directional, always. This is a recurring themes that I do, directionals and time decay. So before we go into the tools and we go into the trade setup that can help you and change the way you trade support and resistance, I want to show you something. Can everybody see the chart? Please, quick yes, no? Not sure what you see right now. So, okay, cool. So here's what happened. This is the day trading zones trade navigator, and I don't want to go yet into it. We'll go back into it with the trade setup, but I want to show you something. Here, this is a bell curve. This is a new gimmick from Thinkorswim where they give you essentially a bell curve interview that here you can stay at 68% chance of success on the resistance, 68% chance on the support, 68% on the resistance, 68% on the support. And this is for the September expiration options. This is for the October expiration. But what it doesn't show is what do I do for the weeklies. And what we do in the day trading zones is we wake up in the morning, use our full pro tool that I told you that cross time frame weekly, monthly, daily, 5-minute chart, 60-minute charts, 4-hour chart, and we combine into everything into 1, 2, 3, 4, 5, 6, 7, 8 zone. 8 zone where we do the travel, the work, and I'll show you from our full pro tool of taking 27 zones, 27 complex zones on our 60-minute chart across time frame to come up with 8 zones to help traders to do their credit spreads, to do their options, directional buy put, buy calls. Okay, so I showed you some screenshots of results that I had in the past, but again, I am a trader. I trade real money. This is real money. You can see that today I've made $975 today, okay, mixing time decay and directionals. Typically, I trade the SPY every day, in and out on the weeklies, as you've seen. Here I make $465, which is half of my profit. And everything else is time decay. And as I showed earlier on, when I finish the day here, guys, I finish the day with a positive decay. I close my directionals, I'm out of the SPY directionals, and I have positive decay, which means that I have $64 coming to me every day, regardless of whether I go play golf or not. I structure my portfolio out of the current price to be able to trade smart, like I showed you on those charts, to be away from the current price. So let's go back to the chart so that you clearly understand. The traders and the institutions, they don't trade here at the current price. The institutions are going to look for support, like on the day trading zones, and resistance on the day trading zones for the week, or they are going to look at statistics, the one standard deviation here as a support and resistance on the SPX or Google to trade the monthlies. And what they are going to do is when those levels are reached, they are going to defend that by selling out of the money calls. And when they are going to reach here, they are going to sell out of the money puts, or they are going to be directionally long. The problem with most of the traders, and 90% of the traders that are losing money, okay, this is the problem here, is that most traders trade this crap. And traders get killed here when they trade this crap. And this is why we help traders in between the 1 standard to standard deviation weekly, monthly, to trade within the day on the daily basis to have high probabilities of success by structuring extreme sell zone, the red lines, which we are looking for buys, or structure out of the money credit spread, or the extreme green zone where we are looking to sell, to structure sales. So now, I want to share with you some trade setups and short formations that can help you in your trading, whatever you use as support and resistance. So just curious, what is it that you guys use as support and resistance to have an over 50% chance in this room to trade like a professional, not to be a retarded gambler? What is it that you use? You just come in the morning, put your hands in your fingers in your mouth and wonder where the wind is going to blow? Or do you have a structure in the morning? So Joe says, I'm looking at Fibonacci. Vlad says, I'm looking at the tape. And reading the tape is very difficult. A lot of guys don't understand the tape. Trade Seeker says market profile. John says Renko. Tanaka says volume profile. What else do you guys use? Like Gary says support and resistance, but support and resistance is very vast. It could be volume profile, Fibonacci extension, moving average, EMA. It could be a Bollinger Band. There's so many things that comes into your trading if you are well prepared in the morning. Alfred says the charts. John D says I scan for opportunity. So it's probably talking about high volatility, low volatility plays. So everybody, if you are a professional trader, you are going to come in the morning with some type of a structure that is going to help you have an edge in the market, okay? Like here, Brad says stochastics and EMAs. Joseph says options are different than stocks. Options are different than stocks, but if you don't know where the underlying is going to go, and you don't know the support and resistance on your underlying, your option career is not going to last very long, okay? I've done this for many years, and this is the fact. You got to master where your underlying stock is going to go in order to master your deltas and master your theta and your time decay in your place. So let me share with you a couple of trade setups that have saved my life over the years that might help you within your own support and resistance, and I'll explain each pattern and which trade setup that I combine with a chart formation. So here's what I use. I use 4 trade setup, but really out of the 4 trade setup, I'm using 2 trade setup, and two are really a big mistakes that most of the traders are doing. So this is why I put it for traders to understand the big mistakes. So most of the time, traders are doing the following mistake. They go at support and they go long and they see the tape making higher highs, higher lows, higher highs, higher lows, and they see the higher bids and they are long. This is no problem. You are good here, you are long. But the critical mistake number 1 that you do, and when I came from Europe many years ago, 20-something plus years ago in the US, this is a mistake that I used to do all the time. I was like, okay, my resistance I just hit. So what I used to do is get out of my longs. But what I didn't understand is the market makers, the institutions, they can't see your order flow. They can't see with the high frequency trading system, they can read order flow. So they see, for instance, let's say that resistance here is the ES 2000, which is a nice, cozy round number. They know that most of the retailers are going to put their stop loss around the round number 2001, 2003. So what they'll do is they are going to run you through. They are going to run you through because the mistake number 1 that traders make is they get out of their long here, but they proceed to go short right away. Big mistake. Because what happened is the market maker and the institutions, they come in, they see the order flow, they'll push that puppy to 2025 to 2050, and then they'll reach a neutral point like in physics where the ball doesn't keep on rolling anymore by the friction of the floor, which is the force of physics. And at the neutral point, what essentially will happen is the market is going to roll back. So it's a cross and a recross of the same 2000 on the ES. But now the shift of momentum or the power of physics is in your direction, is down. And this is where you can start shorting, a cross, recross. Typically what I do a three-punch overlay strategies that I will teach next Wednesday with portfolio management on a free event at 8 p.m. Held by our community, the daytradingzones.com. And what I do usually is I start by a call credit spread, or I go out of the money. So if they start hooking down and recrossing at 2050, I might take a 2050, 2070, put credit spread, call credit spread with a short strike around 2050, the high, or 2070, and I'm starting to bet a small side on the downside. And what I do is I wait for a cross, recross, and a retest, and that's my favorite trade setup. The cross, recross, retest lower high. It could be a little above, a little below your zone of 2000 ES, but nevertheless, it's a lower high. And this is my favorite trade setup to do directionals. And I do directionals at about 15 days to 30 days plus because you want duration in your side. I buy puts or calls right there, which I mix with the time decay credit spread above, and I have still positive decay. So my favorite trade setup is the cross, recross, retest. Now, let me show you something quickly. When those trade setup happens, they are even more powerful if you mix them up with a chart formation, which could be a double top here, or it could be a head and shoulder here, or it could be a retest lower high with a double top, or again, a head and shoulder and down. They play tricks, okay? But so long you are aware of the trade setup, plus the chart formation, those two together have saved my trading career for almost 21 years now. You know, trading is all I've done all my life. I started very young. I'm 43 years old. You know, I started trading full-time at 21, 22 years old, guys. I passed my licenses. And those simple techniques around your support and resistance, that cross, recross, shift of momentum, that retest lower high, combined with a double top, double bottom, or head and shoulder, works lovely. Now, there is another trade setup that happens all the time because the markets are not moving up and down in a linear way. They play ping pong. They play channel. Problem is most of the traders screwed up all their channel. Okay? So let me show you this. The ping pong play is easy. Number one, you need to know in your chart what is the main trend. Question mark. The main trend on the ES and the SPY for the past 4 years on the weekly and monthly chart from everybody who has a brain is what? Up. So each time you have an intermediary trend retracement, which is usually your 60-minute chart and your daily chart, when they go down, they really go down to support like they've done 2 weeks ago, to retest monthly and weekly support. So what you have to understand is after the up and down moves, market usually have consolidations. So in this example of ping pong, if we assume that the main trend weekly monthly is down, here's what happened. You come here, there's a net buyer. I call that a net buyer. Then here, there's a net seller. Here, you come here, and most of the traders, they make mistake number one crucial. They see, oh, we are going to break here the previous low. Boom, they short and they get screwed, and there's a net buyer too. And then they come back here at about the same level, net seller. Well, 2 points in mathematics, the definition of a parallel line is 2 points. So seller number one, seller number two, buyer number one, buyer number two form the channel. So here is where statistic comes in and where it helps you guys with your own trading, and we'll go back to real charts. And then I'll show you also before we end the evening how you can trade the equivalent of 1 ES with about $500 to $1,500 by trading the SPY like I've done today, making $465 of real money today. But I'll show you that towards the end. Let's focus on this first. So here's what happened. When there's a third touch, most of the traders again say, okay, now it is. Let's short again. Now is the breakdown. But the problem is statistically, if you had a net buyer here and a net buyer here, which is a cluster, you know, statistically wise, if you short here, if you try to short, question mark, you have a 66% chance of losing money because you have only 1 chance out of 3 statistically to what happened prior into the pattern. So usually you buy here, there's 66% chance of making money. You go up and you go here. Now you know that the main trend is down. So what I do usually is on the third touch, write that down. The third touch, okay, I short at the top of the cluster and I put a stop loss on the high candle here and here for the directional. Or on the third touch, I do a out of the money credit spread, which is like a bet, like when you fish. People, if there is fishermen in this room, you put a little bet, a little shrimp into your hook, you throw it in the ocean and you get a big fish. So to me, my hook, my little shrimp is always out of the money credit spread so I don't get burned. I look at my high here and I add another 10 points or 20 points or 30 points, whatever I can find myself with the right premium, and start selling call credit spread. Then it recross the day trading zones. I have my confirmation, or retest lower high. I have my confirmation and I have at 50% of my sides into directionals. Now, I am short with an average price at around here versus, again, the same guy who is trying to short the break of the cluster. So remember that when you trade cluster, the winners are the people who buy the third touch or short the third touch within their main trend, and they are the people who start with out of the money strategies because you don't know if this thing is going to continue up, but you have a high probability or higher probability to short here versus shorting here on the second or third touch. Does that make sense, guys? Quick yes, no. Because that's basics. This is basic. So we are going from 0 to 150 miles an hour as we progress through the next 30 minutes. Okay? So let me show you now in the chart how those patterns happen all the time. Let's go back and let's look at charts. And you'll see that those patterns happen to your own chart. Okay? So let's look at some stuff on the day trading zones on the trade navigator. Let's say, for instance, I open the crude of today of our zones. Here's the pattern, the same pattern I just discussed. So let's see, everybody. We are going to be interactive. So this is a setup what here on the crude? That's the cross recross. We all agree? Yes or no? From the extreme sell zone, we are looking to buy. Right? So cross recross. Then you have what here? The retest, which is my favorite. So that's trade setup number 2, cross recross. That's cross recross, retest higher low. Room. You go from the sell zone all the way to the top of the caution zone, and who knows, potentially at the bottom of the buy zone or the last frontier before we go back and short that puppy again. But when you know you come this morning and you're already in the sell zone and you see a cross recross and a retest, the last thing you want to do in the crude is start shorting the puppy here. Because what you're doing here when it cross recross the day trading zones to the tick 92.55, which is also institutional buying around in the crude. And they retest also higher low at 82, 92, 85. Room, they zoom to the next one at 94.55. Okay? So this is the type of pattern that you will see every day. Now, another cool trick that you have available also on your charts is I like to use MACDs, the 619.9, which is a fast MACDs, on the 60-minute chart, and you see on the retest, the MACD was crossed. So I have MACD cross up, I have the cross, recross, retest higher low, my favorite trade setup. This is a good pattern to make the money. Does that make sense, guys? Because I'll take questions later on, but I have a lot of stuff to cover. Does that make sense? This is the type of things, whether you use your own support and resistance, those trade setup, and those chart formation, and that MACD will save your life and will help you, okay, for your directional trades and for your time decay trades, okay? And this is how, again, it's not just me spitting words here. This is someone that is very rare in this industry of educator showing you real money here. I made that money today using the same principle. So I'm someone that pride itself to put his money where his mouth is, where there's a lot of people putting their mouth into their PowerPoint. Okay? And so this is all those setup that I've done today, and those are not lingering trades. Like if I take trades here, I go in my trade path. This is SPY that I got in and get out with my principal, buying calls and 99.5 calls today and crush 465 on small amount. Those are EGN is a call credit spread that I took for 240 bucks that I sold for 80 cents that it went to 20 cents in one day. If you guys, if I click here, can you see my positions? Those positions have been taken this morning at 11:17. Do you guys see that? Yes? No? So it's not just me coming with open position area for the past 2 weeks. I'm showing you fresh positions. This is very rare. Here and here. Those it's a call credit spread that I took today. Okay, that you see right there, that I sold for 80 cents that crushed to 20 cents. Just FYI, that's 80% of my premium that has been crushed in a couple of hours today for a weekly, no, actually that's a 29 days to go. As a matter of fact, this typically I take out. When I have 75% of the premium crushed, I move on and redeploy the capital into other trades, okay? So now, let's look at other charts. Let's go through charts so that really you drill on those principles, okay? That you look at those principles. So let's look at Netflix. On the trade, we have 10 markets on the day trading zones, Trade Navigator, which is our entry service that we, and I'll show you exactly what we do with this. So here's what on Netflix. That's the cross recross, that's the retest higher low, that's the retest higher low, that's the retest higher low from the sell zone on 448, 445 on Netflix, and guess what? All the way to the buy zone, almost the top of the buy zone today, to the top of our 476, to the tick, and then there's 479. So if I see at the top here a cross recross of 479, 480, a retest for 479, and a failure of 476. Is this a good signal to start selling call credit spread here? Would that be? Quick yes, no. I would have a shift of momentum and I would have a lower high on the buy zone. Would that be a good point around there to sell call credit spread? Then I would look at premium and say, hey, can I get a 495, 505 call credit spread with a week to go, or a monthly or a weekly, depending on your time horizon. Okay, Bob, oui. Okay, I guess I have been under the radar, but I was trying very hard to get an accent from Texas, but this did not work tonight. So this is one. Let's go to another chart. And again, if you guys have accurate support and resistance, those trade setup and those chart formation will help you. Let's go for other ones. And look at the, look at the years. Why have I been long the years? Well, look, it's pretty obvious. Look, yes, cross, recross the sell zone, okay? This is pretty much all about a retest of sell zone, higher low, destroy the caution zone, going all the way to the buy zone DTZ. And you know what's pretty cool if I zoom here? Can I zoom this way? Zoom this way. So hold on. Let me take my, here. And you see, it's pretty cool because these signals, okay, if you look at those, the signals happen here. Soon as my bottom of my buy zone was 1948, 1950, I did an action video. I do an action or 2 action videos per week where I tell everybody, watch here, there's a key turning point. And I told everybody. And that's why I'm not fighting the trend, you know. I trade what I see. This morning on our members area, I told if we hold 1977, 1981, which is the bottom of the buy zone and the top of the caution zone, I will be long. It's not just me telling you. This is, we have hundreds and hundreds of traders that have the DTZ analysis and the use. We have institutions and also, how do you call that, prop firms using it. And what they do, they come in the morning, I post it between 8:15 and 8:30, and I'm going to show you how it's being done, how I reduce the work of 27 zones across time frames, and instruments that I've used with real money over the years into 6 lines that help me tremendously, and helps also the people that are members into the DTZ analysis 10 markets. So here is what it is. So if you look at the members area, It's not just me telling you to look good. You've seen me making $465 with it today. It's us giving a structure, helping traders to not just giving you support and resistance, but giving you, so we give you the buy zone, the sell zone, but we give you, but number one, I get together weekly with you for members only sessions where we look for opportunity for the week on those 10 markets and other markets with the full Pro Tool. But we hold your hand to really understand what to look and better interpret those lines too. So I tell you, like, yes, same story. So long we hold 1977 key, 86 longs in comment to next DTZ target. This was posted at 8:15 a.m. This is what allowed me, with a small investment on the call side, on the weekly calls, to buy, to make $465 instead of screwing around the ES. Okay, I trade the SPY. Same here, I talk about the 98.50, we talked about Amazon, we talked about Netflix, and that's what we do, and then people, so we help people structure their trades and to help you. So when you look at charts, there's a routine that I do. Can everybody see my screen? Can everybody see the screen? Apparently it's not changing. I see that you're stuck into one of the, okay, now we are. I don't know why it took so long. But anyway, what we do here is, this is my screens. I have I have a screen that you don't see, that is right there. But I simplified my life. I used to trade with 6, and I simplified. This is why I trade everything on higher hourly chart, where I don't need to go from time frame to time frames. And my philosophy is, the less you see, the more you see in trading. The less you trade, the more you make. You know, the less you trade, the more you think about your support and resistance, the more you think about the probability of success about your trade, the less you pay commissions to your brokers, which, if you look at your 1099s at the end of the year, you'll see that there's a staggering amount of money that goes to your brokers, and they will kill you. And this is why 90% of the traders lose money. Okay? Just FYI, I don't want to sugarcoat this business. 90% of the traders lose money, but yet you can flip the card where you win 68% of the time to 95% of the time with proper support and resistance and proper strategies like the options, the selling out of the money time decay. Because this is crucial. This is where the money is being made. So what I do in the morning is I come, I structure from the full Pro Tool here, those 27 zones, which have directional tools, up arrow, down arrow, blue dot for 70% continuation of the trend. Then I synthesize everything into those 7 zones. Because the real problem you have to write tonight is this, when you have support and resistance. And this is where most of the people really lose money, is if you have a support and you have a resistance. The first thing is, most of you and most of me, most of us have support and resistance that are within 5, 10 points, 20 points. Some are more accurate than others, and we pride ourselves to have ours being very accurate. But, you know, support and resistance are what they are. The problem with people is they don't understand. Well, it's going down, down, down. When do I buy? Well, you buy when there's that cross, recross, that retest, and back up. But the problem is, at what point do you chase the stock? You know? So you want to know what is the probability, the percentage of the stock when it recrosses to go up to the next level, that's question mark, or to go back down, or to retrace 1 time, or to retrace 2 times before it flies to the next resistance. And I think that's the problem with a lot of people trading support and resistance, is they see the support and resistance, they don't know the right trade setup to really trade the right shift of momentum, they don't know where really they start chasing the move towards the resistance, they don't know when they are starting to chase, like the traders have a tendency of chasing the break here instead of waiting the first pullback, the first retest towards the support before it breaks again. And the more you chase and the more you buy, pull back the second time, the third time, the more you are in the probability of success that is going to diminish, going down and down and down. If you buy here, this is the last third of the move. This is 1/3 of the move. So if your range was 3 points, 3 points, 3 points, and you start buying here, don't you have 66% chance of losing money? Do you guys understand? You guys understand? That's simple mathematics. You know, if you have support and resistance, and there's a 9-point range from here to here, and you start chasing, you miss the first retracement here, you miss the second retracement because you don't know where are those retracements, and you miss the third retracement, then you become the guy who is buying in the last third and really having 66% chance of losing money. So the beauty of having strong support and resistance is you start, like I told you, the 3-punch. You start with the out of the money strategies, you have directionals, and I show you next week, I'll show you on my free live webinar at 8 p.m. next Wednesday, how I do some of the stuff, which options, you know, it's a question, which options are you looking at, which option, open interest or volume are you looking at. There's a lot of intricacy in options, but when you understand them, I'm telling you, you're flying to be a trader that has a 68 to 95% chance of success. So matter of fact, what you're doing is you're flipping the cards to being a losing trader to a winning trader. Okay? So if I put, I didn't even open the full Pro Tool, but I want to show you the work that is being done. Arrows. Everything that I do it on stocks. Everything is stocks. All my tools are stocks. They work for all ETFs, stocks, and futures. Okay? So this is a weekly chart. Let's pull, let's say, a chart of REGN, the trade that I've done today. So I pull, this is my full Pro Tool that is available for all market, all ETF. They are not restricted to 10 markets, but they are complicated to use initially, and they take a little bit of know-how and understanding. But essentially, what happened with those tools, so that you better understand the logic, is, like I told you, in support and resistance, you need to know what is the immediate trend. The immediate trend is being done by an up arrow, down arrow in our tools. Then there's a continuation. You want to know if this trend is going to continuate to the top. And we do that with blue dot for longs and pink dot for shorts. So if you notice here that there's been no pink dot on our EGN since 2012 to the top here in February, March 2014. So here's my trade setup again, even with a big I's view for the weeklies, is I have a cross, recross, a retest that fell. They came here, retest that fell. They came here yesterday or the day before, retest that fell. And this is why I started shorting this thing again, okay, for the week. Now, I have to be careful because as this thing comes back and touches its weekly support at 340, 335, I have to get out. I told you that this spread I've done today was a high probability spread, and ideally you have to get out when you make 75% of your money. Now, you have to understand that those 27 zones with the indicators are available on the 60-minute chart. They are available on all the charts. This is why I don't flip charts usually, but I wanted to show you. So here's the pattern again. Here's the pattern again. Cross, recross, retest of the day trading zones, retest failure. I took the credit spread, and as you've seen, this is again a case where I put my money where my mouth is, and not just being an educator that talks and talks their butt off about credit spread. I took it today, sold it for 80 cents, and it crushed to 20 cents. Usually this is the type of velocity of money that I move on and I move on. Because this pays like a car payment. You know, you do 10 or 20 of those a week, and you make $5,000 a week with high probability of success. Notice that the stock price, if we go back to the chart, the stock price on REGN is at 341, and notice where I put my short strike on my options using the day trading zones. What did I do? Look what did I do. Look what did I do. I used the main day trading zones 352, and I went to the level above at 355. And that's it, boom. I have the chart pattern, I have the down arrow, I have the pink dot for a continuation of the down move. I had everything in place to make that money. So this is the type of trade that I like. So what I do is I use those 27 zones, and what we've decided for our community is to place a 10 market where we have most, instead of being the jack of all trade, I do all the work. I wake up at 5:45 a.m. in the morning, look at the MACD, look at the up arrow, down arrow, and take those 27 zones and make it easy for everybody into a buy zone, sell zone in 7 to 8 zone on the 10 most popular market that helps people trade futures and options together. So you can sell credit spread on Apple, you can sell credit spread on Amazon, Google, and we have a 10th stock in rotation, which is Netflix. And Netflix, this month is the month of August, and next month we might have IBB, the biotechs, we might have Tesla. Every month we switch one, where we feel that it could be good for our traders to get you the buy zone, sell zone. I use the SPY, the ES, and the NQ and the YM, there's the YM too, to trade the SPY options. But during the intranight, I use futures, and I use futures to hedge my positions on my options. If my portfolio is the overall delta positive, and there is a very bad news, I can go overnight and offset that by shorting some TF or shorting some ES. And so the strategy and the philosophy behind the 10 market is, instead of being the jack of all trade, become specialized in a couple of markets instead of being distracted. A lot of traders get distracted and they lose a lot of money. Become a professional. I specialize trading puts and calls on the weeklies and 8 days to 15 days out on the SPY to replace my ES, and I will help you understand quickly, if we have about 5 minutes left, why the SPY is so much more powerful than the ES. And then all I do here is I sell time decay on Amazon, Apple, Google, and Netflix and others. And I want to have positive time decay like I showed you. And like I showed you, the problem with the 1 standard, 2 standard deviation, not only they screw you up during earnings season, but you see those are the monthlies, and we use weekly zones that are proprietary across the weekly, the monthly, the daily, the 4-hour chart, the 60-minute chart, and avoid you to flip charts, because you have no chance against the high-frequency trading system to crush the high-frequency trading system if you are not prepared in the morning, and if you have to look at your weekly, your monthly. Now you have 10 screen open. All I want is one. See my cross retest, and I'm done. And this is how I crush trades like this. You know, do we have losing days or losing trades? Absolutely. Look at all my monitor tabs. I mean, did I make money on all the trades? Absolutely not. Look, I lost money, and I'm still losing money on my ZB short here. And I pretty much made money on everything else. I lost $68 on Amazon, made money on the credit spread on CMG. I made money on that OEGN credit spread. Made money on Google, which has positive theta, and made money on the SPX. I do a lot of the SPX and the directional on the SPY. Okay? So you see, you have losers and winners, and people who just showed you winners, well, you better run for the hills, because obviously nobody can be. It's not in this business. It's a probability business. Does that make sense, everybody? I mean, if someone just showed you winners, you better run. Because this business is not linearly just straight up. There's winners, there's losers, there's positive days, there's losing days. But if you stay positive theta, where you play that time decay, you will be trading like market maker and institutions, where you flip the card. Instead of being part of the 90% of the traders that lose, with the proper, if done correctly, with the proper processes, you are going to be part of the people that makes money 68% to 90% of the time. That's it. It's bottom line. It's clear. You know, it's all about defending, managing your losers. It's all about understanding the proper support and resistance, and managing your portfolio when you have many positions, which again, I have an event last week, which I'll go a little bit more in depth. Okay? So the last thing I want to go again before I'm done tonight, who is an option? Who is a futures trader only? Says me. Okay, and after that I will answer some of the questions if Stephen and Jim allows me. Who only trades the ES, for instance? Who has no clue? Because I'm about to change your life forever here. As we speak, my position on the ZB is improving a little bit. I went from 975 or 960 to 1,060. We are live. I believe Steve told me he had a dinner commitment, John V. So it's not going to be easy to get a joke from a French guy, but I'll go over the other thing. So let me explain why I trade the SPY quickly, everybody. And I think it might change your life. Okay? So let's look at an option chain. If you look at an option chain on PCLN, everybody, can we safely say, if I look at that strike, the 1250 strike here on PCLN right there, if I buy that stock, that option for 35.30, and I have to turn right away because I noticed I was wrong and sell it at 33.80, which is about a 0.50. I'm losing a 0.50 in spread. Is that a good deal, guys? If I buy an option at 35.30 and I have to turn around right away and sell it for 33.80 and lose 5% of my capital, is that a good deal? Who is making the money here? Me, the buyer, or the retarded gambler who buy it at 35.30, or the market maker who sold it to me at 35.30, who is going to go in turn and make the 5% and buy it back from me at 33.80? It's going to be the market maker. So right away you see that when you have large spreads, options with large spreads, they are a sucker game. Write that down. As I'm telling you, I'm helping you through years of trading real money. The large spreads options are going to crucify you for being directional. If you buy the puts and the calls on the PCLN, you are going to be the sucker. But now, do you understand, if you are suddenly the seller of that call, are you the smart guy here? Yes or no? Especially that call is going to go down and down and down in value if it's a weekly call by Friday, and all the time value in that call is going to be worth zero, worthless. Is the seller of the option the smart guy on that PCLN? Yes. So here's what happened. Hold on, Gabriel, I'm getting into it. In that case, selling options is the smart thing. Plus, you see, write that down also, the open interest on those are very minimal. So now, why do I buy puts and calls on SPY? Look at this. And I do it every day. If I trade, unless I'm in a consulting gig for institutions or hedge funds, like right now I'm working very hard with an hedge funds that I invested $50,000 of my own money and do free consulting for them. So I spend a lot of time where I still trade. Look. So look at the open interest now on the ES, on the SPY contract. 31,000 contract traded on open interest. 83,000. Look at the volume. 100,000. This is much better than the 500, 200 contracts that you've seen on PCLN. So this is extremely powerful and profound. What it shows you, there's a lot of liquidity. Usually the spread on those are 2 cents, 1 cent. Do you guys see that? Quickly, yes, no? Is 2 cents better than the $1.50 on PCLN? So this shows you, with all that volume, that you can get in and out buying 10,000 shares, 100 contracts on the SPY without being manipulated by the institutions, because the institutions themselves are piling into the SPX and the SPY massively. So this is the only game where you can buy options and sell options in lieu instead of buying an ES, right? And be at a profit. And why are you at a profit versus an ES? Well, look at the capital requirement, guys, to buy 10 contracts, which is 1,000 shares here of the SPY. $470. Is $470 better than one ES? 10 contract, which you have to know, 10 contract on the SPY equal 1 ES in power. You got to know those equivalent. 1,000 shares of the SPY equal 1 ES equal 10 contract SPY at the money. Is $470 affordable by everybody in this room? Absolutely. But most of the people in this room, you trade 1 ES with $5,000, $3,000 instead of trading 1 ES with $10,000. You should trade 1 ES with no less than $1,000. So let me show you the theory of the beauty of trading the SPY, and then I'll give you a couple of stuff that can change and help your trading career again. So now, here's the equivalence that you need to know, because a lot of traders don't know that, but all the professional traders know. 1 ES, this is wrong, it's 1 ES equal 10 contract at the money equal 1,000 shares. So let me show you that now. Now, oh, I have not changed my slide. Now, 1,000 shares of the SPY today was $199. So this is a capital requirement of $199,000. Now, 1 ES safe is $10,000 to $5,000 because most of the traders risk $100 per contract. Okay? So $100 per contract, right? Okay? Is one contract here. $100 per contract. Okay? So what happened is you use $100 per contract, which is you risk 1% of your capital of the 10,000 is 100, or some of you trade with $5,000 on ES, which is when you risk $100, unfortunately you risk 2% of your capital per day, which is ridiculous. Okay? So now if you buy 10 out of the money contract, like I show you, usually they are between 50 cents and $1.50. So I took an average price of $1. So now your capital requirement is 1,000. Is $1,000 better than $199,000 in margin requirement? Absolutely. Now you compare with the ES, is $1,000 better than $10,000 or $5,000? Absolutely. Because you could use another $9,000 or $4,000 in selling credit spread and redeploy your capital. But now look at your risk. Here you risk $100 to $200 if you use 1 or 2 contracts. And here I use 20 cents on 10 contracts, which is $200. So you basically have the same risk and using 5 to 10 times less capital. But you have not seen the beauty of all of this yet. Most of the day, the people that trade ES, if you are good, you are going to do 5 points to 10 points. So let's say you do 10 points, $500. $500 divided by $5,000, but $5,000 is only 10% return on your money. 10% return on your money. Most of the days on the SPY, it moves 10 cents to $1. Okay? You are making 40%, 10%, 20% to 150 to doubles and triples. And if you think I'm silly when I say that, well, go back to what I've done again. Again, putting my money where my mouth is. I've done $465 today on buying the 199.5 course that expires next week and 22 days. So if you look the 99.5s, if you look at the pattern and the behavior of the 99.5 that expires next week, look what happens. Look at the charts today. I'm going to do a quick chart of the option itself, and you are going to see the option. And can we do this? Oh, here's the option. Do you see how the option went from a low of 90 cents to $1.20? No, 80 cents, sorry. 80 cents to $1.20. And the option yesterday was at 60 cents. So essentially this option doubled in one day. Okay? So here you had a 100% move in the option, right? With $600 investment here in 2 days, right? And if you look at the ES for the past 2 days, from top to bottom, if you are a genius, instead of making a 100% return on investment, you go back on the day trading zones. Let's go to Thinkorswim. Let's look at the trade navigator. And let's look at our chart here. And let's look at the ES, and let's look at the ES move for the past 2 days. Let's say you would have bought the ES at the low at 71, sold at the high at 20. You made $1,000 per contract. $1,000 per contract divided by, let's say, $5,000 margin requirements, you would have made 20% return on your money. 20% return on your money versus 100% on your money. Do you guys see the power of the SPY? Quick yes, no. This will change your life. This has changed my life. Instead of trading the SPY, the ES like a retarded gambler. You make 20% here, you make 100% here. Here you use $600 in margin requirement. Here you use $5,000 in margin requirement. This is what will change your life. Plus the stop loss that I use, one day I will explain to you, is the market maker stop loss that most of the people do. So hopefully all the stuff that I've done tonight have been interesting to you. If this is, if all of this makes sense, we offer something that is not available on our site tonight for the Steve's community. I offer a 14-day trial for $7. Usually it's $97 a month. You have the opportunity tonight to get all the auto plotting tool for NinjaTrader, eSignal, and Thinkorswim on those 10 markets I showed you. You have access to our membership area to guide you for 10 days, for 14 days on how to trade this. You have the auto plotting tool. You come to the live chart blast. The next one is Monday at 3 o'clock. Okay? And you'll get our weekly video blueprint, and you get a bonus on how to master credit spread series 1 and 2, which I had done an event 1 year ago. Those principles are very important, especially if you know squat about credit spread. All of this, you can get it for only $7. And if tonight the stuff that I shared with you makes sense, and you think it can help your trading and change your life for only 50 cents a day for the next 14 days, when you think about the commissions that you spent, the profit or the losses that you have in your current trading and your current state of trading, this is a no-brainer deal that Jim can share with you. It's a special deal that is not available again on our website. The deal, it's been posted right there by Jim, will be available to you guys for the next 3-4 days after the replay is being sent, and then we'll take it up. I mean, we'll take that replay up. It's a no-brainer deal. Again, you get the DTZ analysis, access to the membership area that I showed you earlier, right there. Let me show you again so that you are clear on what you get. You get access to the member area. I don't know, somehow I don't have screen share anymore, so or somehow my screen turned black. But anyway, this is all the stuff that we talked about. We have an event for you guys who join us next week. I think you'll see the value of how we can help you. It's only $7. I think it's very fair for you guys to see how this can help you in your trading career. Again, we trade real money. We have an awesome community. These are real traders. I also do a mastery class once a year, 3 times per year, sorry. That is very, very unique. For 1 year, I take a couple of traders under my wing. See, we have a Facebook private mastery group. Those are real people. They make money. They are happy. They smile, comparing to all the traders that cry. Here are my guys. You know, that's Lisa. She has a 95% win ratio on her credit spread. This is my elite group for 1 year. And those guys are real traders. See, they share credit spread. They share entry, exit, scans. We do a lot of stuff. And so I think this will help you. You will get that blueprint every day right there to maneuver the market. You'll get access to our chart blast, and you'll get access, of course, to the trade navigator board here of those 10 markets with the buy zone, sell zone, caution zone, and get an opportunity to understand better what we do for only $7. Again, Jim gave you the link. This is there. If you guys have some questions, I'll be glad to answer the questions. Okay, this is, I don't know if Jim can give me, Jim, do I have 5 minutes for Q&A? Or we have to lock it out? It's up to you guys. Okay, cool. Hey guys, so if you have any questions, let me know. So he says, let me see if I can increase the Q&A and see if I missed. And if I missed the questions, please, I apologize. The questions keeps on going up. Okay. The strikes above 200 on SPY are in 250 sets. Is that going to be a problem? I trade mostly the weeklies or the 15 days out. When I trade day trading, I do no more than 2 or 3 trades per day, and I'm done. I close because I want my positive theta to go back in my portfolio. I don't want to go overnight with time decay against me. Now the question The question is, are the voodoo lines using our lines? Our lines are updated every morning, guys. They are not stuff that stays for weeks and weeks. We update our lines every week. So that should answer your question. Gabrielle, typically, I'm going to tell you my take on taxes. You know, if you're structured as a corporation for your trading, you have a lot of business expense that you can do. Some futures have a better tax implication than trading options, but the SPX itself has good tax benefits. And you know what? Look, at the end of the day, I don't care. I don't trade for taxes. I trade for making money. And if I'm set up as a corporation and I'm a profitable trader, that's all it matters, because most of the traders lose money. Yes, we have the auto-plotting tool for Thinkorswim, Calvin. For Thinkorswim, Ninja, eSignal, and TradeStation on those 10 markets. Okay. I'll take a couple of other questions, and I guess we'll wrap it up. Okay, so no more questions? There's another opportunity that you can get. If you guys don't want the $7 trial, feel free to go at daytradingzones.com. There's a series of a 3-part training series video with real money. There's a PDF you can get for free. It's not as extensive of what you'll get, obviously, for the $7 trial, which again will lead to our get-together Monday, and also an invitation for Wednesday's free event at 8 o'clock. But get your free PDF and training series. It will complement a lot of the stuff that I've done tonight. Okay, so hopefully this has been helpful. JJ, you can go on our website. There's a customers 1-800 customer service phone number, and you can send questions at contact@daytradingzones.com if you have any. Hopefully this was helpful, and I was able to help some of you tonight think about how you're trading in a different fashion. I want to thank Steve Bigelow again for hosting this webinar. As usually, great guy. And I want to thank you, all of you guys, for being with me tonight and still being here at 9:15 on your Thursday night. And hopefully the principles that I've shared, it's hard to share 21 years of real money trading experience in about an hour, but hopefully I gave you the impulse to be tuned and engaged with our community. You have a nice evening, everybody, and I wish you the best in your trading journey. Take care and have a nice evening.